Hello and welcome to this video. Today I'm going to be doing a stock analysis on Kering. Now, if you don't know what Kering is, it is a fashion conglomerate. They own Gucci, Balenciaga, Yves Saint Laurent, and a lot of others. Now, firstly, I'm just going to show you the stock over a year, and you're going to see why I think it is a good opportunity to get into the stock now. Look at this. Look at how much it has fallen from the top, which was at almost $800, and now we're trading at 201. I personally do like this stock a lot because recently we had a lot of higher inflations than the previous years, which means, of course, people didn't have a lot of money, but that is starting to flatten out a bit. We see interest rates falling down all over the world, except USA, of course, sadly. But in Europe, particularly, we are seeing a lot of interest rates fall down, and we are seeing a lot of economies of scale growing, especially France and Germany are going to increase the next couple of years. I personally think so. Now, it is a bit of a gamble at this moment because the technicals are horrid at the moment. As you can see, we had this huge gap in the graph, as you can see here, which is a very bad technical where it fell from 250 to 227, and I don't know why I have not been able to find that out. And we also had this death cross, and just the margins between the 200-day moving average and 50-day moving average is horrid. Now, if we draw some support lines, it's gonna be, as you can see here, we are gonna have to go quite a long back before we see the 200. As you can see here, the back in 18 it was still in 300, so we don't even have any current support lines supporting where this bottom is gonna end. Now, where is it gonna end? I personally think it's gonna end about 170. If it's gonna go that far down, I don't know, of course, yet because I can't see into the future. But I like it at the moment because it is simply so cheap. People in the future are gonna buy Gucci and other luxury brands. Right now, they're just in a bit of a slump, but I think getting it now is quite smart. Also because their dividends is insane. I personally love dividend stocks a lot, and as you can see right down here, their dividends is at 5.56%, and that is 4 times a year they are paying out €4. So that is insane. So over an entire year, you're getting €60 per share of Kering. So very, very nice in that regards. Now, if you take a look at the earnings, as you can see, it is tumbling and tumbling and tumbling. Even though the last one they actually beat it, I think that is also why it had a bit of a spike here. As you can see, trading all the way in 240, all the way back up to 280. As you can see, earnings here were positive by 7%. So now the next estimate is higher, which is a nice signal that they even guide higher for the first time in 4 quarters. They actually guide the next one higher, which is quite nice to see that they think also the tide is turning. Now, as I said, as you can see, the dividends are quite nice, so their payout ratio is insanely huge. Now, the income, as you can see, it is just not that great. As you can see, the margins are falling through the floor, and their earnings have been tumbling ever since 22. It has been falling, and last year they only owned. I know it sounds fine, but they only made $1 billion. So yeah, semi-annual, as you can see here, where we take a bit longer years, they make a lot of money still. So yeah. I do think it's nice to get in now. Their revenue, of course, has fallen down, but as you can see, the last quarter they actually surprised. So I think and I hope that it's going to increase, and they're slowly going to make sure that they stay off and maybe trade a bit more flat. And instead of just going all the way down, I think they might just be trading a bit more sideways. My personal target for them this year is 230. Now that might be a small percent, but that is 15% up from where we currently are. So for the year, that would be definitely be my guidance, and I'm strongly considering buying it in, but I am gonna need to see a bit more better technicals and see some flat trading. To be honest, I don't personally need to see a golden cross in this stock because I don't think it's gonna come anytime soon. But I think this is one where I'm really willing to gamble where it's gonna come in before. So yeah, I think it might go down to 170. And if it does go down to 170 and below, I'm definitely buying in. And then if it doesn't, I'm just gonna see if it flattens out a bit, and then of course, I will wait 120 days at least before buying in, because if the next earnings report is as good as this one or better, let's say it's going to be 8% above surprise, that's going to be quite nice for stock, and I think it's going to get a bit more life back into it. Now, the seasonals for this stock is, as you can see here, it's quite up and down. Now, many years they don't increase that much. Some years they do nice. As you can see, we don't have any extremely good years besides 9 and 17. But again, they pay a shit ton of dividends. That is the one thing you have to focus on in this stock. This isn't a stock you buy at 200 and you sell at 350 or €1,000. This is stock you might buy at 200 euros and sell at 170 euros 10 years later, but you gained a lot of dividends meanwhile. So that is the way. Personally, I think you should look at Kering as the way you're making money with this stock is the dividends because they are simply so great. It is one of my own favorite dividend stocks in the entire world. I like it quite a lot. Now, the technical tests, as I told you, they're bad. Now, for the month, as you can see, they are completely hard. We have not a single buy, either in the oscillators or the moving averages. So don't get in at the moment, simply wait. If you do have them, I would just hold them because, as I said, I love the dividends they pay out. I think it's quite nice. I'm just happy I didn't get in earlier because I did consider buying it about 500, and I'm glad I did not get in at that point. Now, as you can see, the 1 year price target is 230, 237 years. Now, we have a lot of different on this one. We don't have any strong buys, which I understand. Two strong buys, one buy, 17 hold, two sell, and four strong sell. Now, I do think a hold on this is definitely the correct way to treat this, unless we see some better technicals here. I doubt it's going to be performing a lot better. Recently, I think it's going to be performing quite poorly until it flattens out a bit and people get a bit more confidence in the stock, or it's going to keep on performing badly and go to 170 before it's going to rebound a bit. Yeah, but personally, I like this stock quite a lot. Now, if you did like this video, please don't forget to like and subscribe and comment if you want me to see me make any other stock analysis. Thanks for watching.